If you're back for part 2, then I hope you found the first one informative. I refer to it, this particular episode, as round 2 as opposed to part 2. But I hope you found the first part interesting, which was entitled It Was the Best of Times and the Worst of Times. If you're coming on this part 2, before you see in part 1, I urge you to look up that video and watch it first, because it's a continuation and I won't go back over it for the benefit of those who have seen it already. And I want to save some time as well, because we have a lot to go through. All right, so I would like to, at this point, welcome everyone to Jamaica 411. Thank you so much for stopping by. Keep me company as usual. If you're here with me for the first time, welcome, welcome. Please subscribe, share the video, give the video a thumbs up if you enjoy the content or find it informative, as well as feel free to leave your comments in the comments section. For those of you who are my subscribers and my regular visitors, welcome back. So nice to have you. And I do appreciate the support you give to the channel when you share, when you leave your comments, and when you like the video. So please go ahead now and like the video, because you know when you come to Jamaica 411, is quality stuff you're getting. So go ahead and share, please share, then you return, and then we can now get down to business. So of course, you know, I want to thank you in advance for all that you do for our channel. May I call it our channel now, right? Great. So with that out of the way, let's get down to business. So this heading now in his submissions, this is R. Danny Williams, his real name. Don't know what his first name was, but it was R. Danvers Williams, and he died recently. To much accolades from his peers and politicians and people who knew him well, that he really was a patriot. That man was a patriot. So let us continue to hear what he has to say, what he's telling us and the rest of the generation to come to avoid in future. So let's continue. So he says here, what, if any, was Life of Jamaica's role? And you remember he was one of those who started up Life of Jamaica in 1970, right? Great. I am not an economist, but common sense suggests that if a large, relatively conservative, professionally managed company like Life of Jamaica experienced serious liquidity and solvency problems in the late 1990s, it's important to examine the fiscal and monetary environment of the period leading to the financial collapse. Of course, he's saying we ran our company not with lavishly and extravagance. We were prudent. We make good decisions. And when we face challenges, we found a way in order to make profits. So when we get in a trouble, it is important that we examine what could have caused it in the environment. And that was the monetary and the fiscal environment, meaning what it was that government was doing that could have caused a company like his to have fallen into difficulties. That's what he's saying. He goes on to say, in order to understand the role played by Life of Jamaica and a host of other financial institutions caught up in the debacle that led to the formation of FINSAC, one must first examine in detail the economic environment that was its precursor. Yes, we need to know what could have caused it, right? So he said no. He's telling us what happened now in his view. Between 1990, that was when the PNP came to power, and 1995, inflation averaged 40% per annum, with the peak being 80% in 1991. And you would recall that in 1991, that was when the deregulation of the economy took place, as well as the introduction, if I remember correctly, of GCT. But let me continue. This created an environment ultimately destructive to business enterprise. The economy heated with massive amounts of money chasing yield, meaning that the money was looking for a way to make more money in order to cover rapidly rising costs. In his case, the role and responsibility of trade unions to their membership is crucial in a high inflation environment. Understandable. Jamaica is not unique in this respect. So naturally, unions were active and forceful in advocacy. Government budget deficits were being covered with borrowed money, with no corresponding increase in production or productivity. Pressures were building that would in due course blow the lid off the exchange rate. The annual increase in money supply averaged 47% between 1991 and 1995. So even after P.J. Patterson was removed or resigned as the Minister of Finance and Omar took over, there were still increase in the money supply, even though that was what was contributing to the inflation and the devaluation of the currency that they later were trying to mop up. So while they were mopping up, they were printing more money. I don't know, he didn't mention anything about taxation at this point, and I don't recall if they were imposing taxes, but let me continue. He said the annual increase in money supply averaged 47% between 1991 and 1995, and domestic debt catapulted from $10 billion to $50 billion. Now, when we are considering debt and the movement of the debt burden, it is necessary for us to convert from Jamaican to US dollars to compare the real term in real term is the actual increase, because remember the Jamaican dollar was devaluing rapidly. But that is not the test for now. So let us continue. Each $1 billion borrowed and spent by government ends up in the banking system. It is then leveraged perhaps 8 times. So 1 billion has the effect of $8 billion speeding through the economy in search of a yield higher than inflation. So he's saying that $1 billion, not just $1 billion. When it goes into the banking system, the bankers would lend the money several times over. And he said it was 8 times. And so the 1 billion becomes now 8 billion in the banking system. And that 8 billion now is looking for somewhere to invest in order to get yields that are higher than the inflation. Because remember, inflation means you have less to spend. So if you are going to invest, you have to make sure that the money that you're investing and the instrument you're investing in, or whatever you're investing in, whether it's real estate to collect rent, at the end of a year, you have to ensure that your return is higher than the inflation rate. Otherwise, you'll be losing, because the money that you're going to get in the following year cannot buy what they can buy the year before. And that don't make no sense to you. So that's what he said. But it gets worse when banks, individuals, and companies make an assessment of risk and decide lending to the government at 40% is safer than taking any business risk. I have some bag of money. I want to determine how to make a return on it. I can decide I'm going to go into business. I can leave the money in the bank. And at this point, you look at what the government is offering. There's no way you were going to go into any business and get 40% return on your money. And you're certainly not going to get that from the bank. So what were business people doing? Instead of setting up businesses, employing people, and growing the economy, they were putting their money in government papers at 40% per annum. For as long as it lasted, they would make some money on top of what they have. I mean, that was the appetite that government had for money at the time. And let me read what he said happened. Those who had cash wanted the highest yield, and those who took or already had business risk associated with borrowed funds found they could not pay the high and rising interest rates demanded. That was because those persons who were borrowing money was borrowing money on what was called demand, meaning you borrow the money and the bank or whoever you borrow it from can call in that money at any time. Secondly, they were also borrowing the money on what is known as reducing balance, because the more you pay, like you pay after 6 months, it's the less and less you pay because you're paying on the balance rather than on the principal. Loans with unpaid interest were sometimes rolled into bigger and bigger loans. Banks booked profits in the process. Yeah, they were making profit. And the borrower's equity in securities they offered diminished. Yes, in many cases to zero. So they kept borrowing and borrowing and borrowing and borrowing. You understand? And the banks had no option more than to keep lending. Otherwise, they would default and then themselves would get into problems. So they have a house, for argument's sake, and they borrowed, and let us say they borrowed some money that was 10% the value. When the interest rate fly up on them, they had to go borrow more money to stay afloat with the business, and they may go, say, to 45%. Then eventually they borrow more on it because, they have space. And then it go up to 60% of the value till it go up to 100%, and then now they were flat out. The business go down, the house gone. That's a position that some persons found themselves in. Because this thing was happening so fast, they just could not think fast enough to find themselves out of the situation. That was what was happening to them. With lending rates lower than the high inflation, particularly in 1991, where the trouble started, people were encouraged to speculate with borrowed funds in real estate, government paper, and the stock market. So what did they do? They went and borrowed money to invest, to make more money, right? And that's what that is saying. A popular strategy was to introduce into Jamaica, bring into Jamaica, US dollars and leverage them by borrowing more US dollars at between 10 and 15%. So me realize, a whole heap of money can be made buying Bank of Jamaica treasury bills and bonds. So I have $1 million US abroad, I bring it in. Then borrow US dollars. Now use my money now, borrow US dollars. Using that $1 million that I brought in as collateral, and our Danny Williams is now going to tell us what they did with the money. He went on to say the entire amount was then converted to Jamaican dollars and placed in government bonds or commercial paper at rates between 40 and 55%. Now, and in some cases higher. Foreigners and Jamaicans participated in what became a highly profitable game of arbitrage. In other words, the whole idea with the high interest rate, you would have recalled for those who were alive then and old enough, they said, Omar said he was mopping up the liquidity. That liquidity that he put in the economy when he printed money, he was trying to mop it up. He was trying to get it back in and offer these high interest rates. Foreign people now and Jamaicans who see an opportunity to make a bag of money in US dollars, remember, they brought in the money, convert it, and then they buy the government papers on short-term basis, because this money that they were offering, right, is over a 3-month period, so they will get back the money. And what they would do is roll it over. I see somebody in the comment section referring to it as a big pyramid scheme. That's exactly what was happening. The government was taking in more money to pay off the short-term treasury bills that they were offering at the time. So people who came in with $1 million at 40%, you're talking about 400,000 US dollars that they're now going to convert and take back out of the country, right? I mean, this was just amazing, but the government needed the money, and they did not see with what other way they could have gotten it other than what they were doing, right? So what was the effect of all of this? The strategy was to watch the exchange rate in relation to interest rates. That's true, because if the money starts to devalue beyond a certain point, you're going to lose. The people who are coming with them foreign exchange, yes, when they convert it back to US, they would lose. So what the government was doing, they were offering this high interest rate and was stabilizing the currency at the same time, which encouraged those foreign people to come in with the US dollars and buy up the treasury bills and bonds. Great. So a stable currency rate and high government paper rates created massive arbitrage profits for many years with absolutely no production of anything other than adding to the national debt. The illusion was that the funds represented an investment in Jamaica. However, when viewed correctly, the foreign exchange was nothing more than a high interest foreign exchange loan, which literally meant that these persons with foreign exchange were getting 40 to 55% interest on their foreign exchange instead of the single digit that they would have gotten if they were keeping the money in the US or elsewhere in the world. And that, of course, would be what they would have gotten minus whatever it was that the devaluation was in the dollar. So let us say there was a 5% or 10% devaluation, they would end up with a 30% to 45% profit or interest on the money that they would have loaned the government. Insanity of no mean order, and at them the people they bid, I tell you. Anyway, he went on to say, in defending the NIR, we were in effect paying additional interest on those loans in an effort to hold on to the funds, right? The high interest rate environment divided the business community into two distinct groups. The cash rich chasing paper profits in the stock market, government paper or high interest commercial paper offered by the banks. This is a distinct disincentive to productive enterprise. The next one would be the bank and commercial paper borrowers unable to keep up with high inflation, high interest rates, and the demands of trade unions. That would be people like him and other businesses. So what happened then? He said the government decided in 1993 to raise interest rates higher than inflation to cool the economy and stabilize the Jamaican dollar. Now, this was an innovation. This was an idea that would have been suggested to Omar as a correct course in order to quickly stabilize the Jamaican dollar. That was the key that they had said from the very beginning. They want to stabilize the dollars. But what they were doing was actually causing the dollar to be devalued because people were rushing to get into this business of buying, papers. So he went on to say the treasury bill rates doubled in 1993 to peak at 48.9% per annum, and at its peak the BOJ rate for overdrafts incurred by the banks was as high as 126% per annum. overdrafts incurred by the banks. It means would suggest that what was happening was that the banks had to be drawing down from the Bank of Jamaica to keep going because they had a liquidity problem. I do recall and I do believe that that is what this is. But if anybody know any better, please tell us in the comment section if this is not so. This course of action would not have been necessary were monetary and fiscal policies appropriately conservative in prior years. But in the circumstances, understandable. It's my opinion that these high rates were maintained long past the point of being constructive, and they were telling Omar it is going on for too long, and it was working so well finally that they did not want to ease up. And that now had some unintended results, and we're going to see what it is that R. Danny Williams said that these were. He went on to say now, the net international reserves grew during this prolonged period of excessively high interest rates, again, for understandable reasons. And the desire for an increasing NIR may have influenced the decision to keep rates high for too long. Just what I was saying, right? So, an initially responsible strategy morphed into a destructive force, eroding the ability of many good businesses to survive or prosper. On the other hand, we have people converting, for example, $1 million into Jamaican dollars and placing the proceeds in short-term, high-yielding government paper. The monthly rollover is compounded for as many as 7 years. So this high 40 and 30% and 50%, what the people were doing, instead of taking the money out and run with it, they were leaving it there to roll over for 7 years. You can imagine what that $1 million turned into. Mercy. Wish we had some money then, Lord of mercy. Anyhow, he went on to say, remember the government objective and the Bank of Jamaica was to cool the economy and protect the value of the Jamaican dollar. That was the objective. To achieve these goals, excessive real interest rates were in effect paid on and for US dollars. Sometimes these US dollars were leveraged to magnify investor return. Them even went so far as to borrow US dollars. So me have $1 million and look here, man, this thing is so good. Me go and borrow like say 800,000 using that same $1 million as a leverage and end up now with 1.8 million converted into Jamaican dollars, put down into the government paper and have it roll over for 7 years. My. I wonder who was hell advised Omar to do this thing. But we don't know yet. Let us continue. It is my opinion interest rates held too high for too long did grow the net international reserves, and the real price Jamaica paid is the cost of FINSAC. High interest rates were simply kept in place far too long and with devastating effect. The price is still being paid and will continue to be paid for generations to come because it ultimately ended up with FINSAC, and we will soon see what FINSAC is about shortly. Some life insurance companies issued interest-sensitive policies which generated high interest rates, so they have to compete. Otherwise, what will happen to them? Life of Jamaica never went down this road because we were well aware of what happened in the United States in the early 1980s when some companies attempted to attract and retain funds this way and the dire consequences that followed. We stuck to our equity-linked products, reflecting what was actually happening in the market. The stock market was falling dramatically, And many people who invested in policies linked to stock prices decided to cash them out. Those were the unit trust instruments. And what happened was, how they had it now, the minute you bring that certificate back to them, on that day, they have to pay you that price. Quite unlike shares. When you're selling shares, you are going to, sell your shares and at the best price, and the shares may keep falling if you don't get your price. That is not the case with the unit trust. They had the money invested in stocks, government papers, real estate, and there's a fourth one I can never remember what it was. So if you bought the unit at, say, $1 per unit, you would watch it, and as it goes up every week or so, or every day, I can't remember how they would calculate and tell you what the price is. I think it's every day, based upon the performance of the various units that they invested in. This is the Life of Jamaica and the Unit Trust and all of those that were Eagle Unit and so on. There were several of them that were using this Unit Trust as a kind of instrument. And as the rate went up, you continue to keep your certificate. So it moved from $1 to $2 to $3 to $4 to $5, went up to $6. And when it went to $6, you notice that it came down, something happening in the stock market, bam, you're carrying your certificate. And the day that you're carrying your certificate, that's the price they must pay you. However, they have not yet sold the shares. They can't sell the real estate overnight, right? And the government papers, they can always cash in, right? And therefore, the whole of them that was practicing this unit trust system ended up owing their customers, right? Those who hold the unit trust certificates, a whole bag of money that they now had to go to their banks to borrow to pay you 20-some days later. They lost their shirts, and these mostly insurance companies brought down the banks that own them. It was just a bad arrangement. Life of Jamaica, by the nature of its business, places funds in investment grade real estate and for particular purposes explained earlier in the stock market. These two areas imploded with devastating results for individuals, small companies, large companies, and financial institutions. Real estate investments, which in earlier years contributed handsomely to Life of Jamaica's profitability, were now losing value at breakneck speed. Eventually, we had to mark down the assets on our balance sheet. I think the Ministry of Finance realized that what these institutions were doing, they were keeping the value on their properties that they held, real estate properties and so on. They were simply marking them up every year to say that they have increased value, and were not taking into consideration the market value. So they were ordered, if I remember right, to do a fair assessment of what the values were. And when they did, and the values were much lower than what they claim it was, that's when the whole of them became insolvent, if my memory serves me right. Let me continue. Much of LOJ's real estate was tied to the segregated funds from which investors were withdrawing their money. So we had to find huge amounts of cash at the same time as the real estate portfolio's value was plummeting and liquidity disappearing. There's nothing you could do about it either. The whole of the money tied up in a real estate and the people were drawing out their monies. That was what was happening. But let our Danny Williams tell you the story himself. So these events placed enormous strain on Life of Jamaica's cash resources. We did our best to meet these obligations and used up substantial resources doing so. Real estate is a long-term investment, and for practical purposes, investors disappeared just when we needed to liquidate our holdings to meet redemptions. What do you mean by that? He meant that, yes, them had these funds tied up in real estate, and the people were withdrawing the money from the investment to which these real estate were tied to. So they needed to sell the real estate, and that was when they needed investors to buy them. But that was when the investors vanished. They couldn't find nobody to sell them to. That's what he's saying. Let me continue. To avoid the potential for panic that could result if LOJ deferred payments, even though it was written in the contract that they can do so, we resorted to borrowing money from the non-bank money market at high rates of interest. Our contracts allowed for a more structured redemption, but we did not want to impose this option in order to avoid a panic response in the market. So rather than say, okay, we can't pay you now, but we'll pay you, I think they said 24 months later over a period of time, remember? They said no, that would make people say, hold on, the man sitting wrong in the economy, and start to draw out their money more, which would put them and others in further trouble. They decided to go borrow money, but they did not go in the banking system to borrow the money. They went outside. So where did they go? Well, let's see if he'll tell us. If he does not, I will venture to tell you what he refers to as the non-bank money market. Anyway, let me continue. In early 1994, Richard Powell, the Vice President of Investments, and myself had approached the government through Finance Minister Omar Davis and explained to him the seriousness what we saw on the horizon for the insurance sector. We recommended government cauterize the problem by making $2 to $3 billion available to the industry for liquidity purposes. However, despite our efforts, nothing came of it. In other words, they were asking to give them a little breathing space by, I suppose, bailing them out or giving them some money, maybe give them, money at low interest rate. 2 to 3 billion is what they estimated would sort of put them right so that they can ride out the waves. And the government did not take up that offer, is what he's saying. He went on to say, I do not believe government understood the magnitude of the problem, perhaps because we had never faced a situation like this before, or maybe somebody else was whispering in their ears as well, giving them advice. The rapid collapse in values starting in 1993 led to the mismatch in assets and liabilities. LOJ, which was a solid and profitable company, now faced the further consequences of holding long-term assets and short-term liabilities. That was the problem of not only them, but all the other local institutions which eventually collapsed. They took money that was put with them as deposits in instruments that they can cash in at any time. But they took that money and go put in real estate, which they could not liquidate readily and give back the people their money. So they ended up with these, what he called mismatch, meaning that the assets that they had became lower than the liabilities, which meant now they were insolvent. Right? Because of that mistake they made, they should have taken all that money that was put with them by the depositors and put it into an area where they could liquidate it quickly and pay them. And that was what? Government papers. They should have put all of the money with Omar so that when the people come back for the money, then cash it in quick and can pay the people. Instead, they had to go and borrow at higher interest rate from what they call non-banking source. And I do believe that that non-banking source was the merchant banks. And you will see what I mean by that later on because I'm going to bring you some more devastating information. But let us hear what R. Danny Williams has to say further. Money supply, which had been growing at an annual rate of 47%, that's the government now, increasing the money supply, annually at 47%, was suddenly and abruptly cut to 12.5% in 1996, drying up the liquidity and shocking the economy. That is like you get a big blow to your system and that give you a shock, right? Our asset values imploded, but our interest costs grew exponentially. In fact, the company lost $1.053 billion in 1996 and faced insolvency as asset values fell like stones while interest and all other costs skyrocketed. Our prudential ratios signaled serious trouble. We required an infusion of capital. That's what them reach. LOJ still had a good book of life insurance business which would recover in due course and provide substantial profits as time has proven. In addition, LOJ had substantial employee benefits business, pension, group life, and group health on its books, which were performing in line with expectations. So they're saying that them still had a good business. It's just that these costs just spiral out of control. But otherwise from that, the business was still in good shape. All they had now to do is to deal with these unexpected high costs and debt that they found themselves in. So let's see what happened next. According to R. Danny Williams, we approached FINSAC for help in 1997. My recollection is that FINSAC was put in place in January of 1997 just for situations like these, to assist these financial institutions, insurance companies that were distressed as a result of the monetary policies that was being pursued by government. So he said that they approached FINSAC for help in 97 and they introduced capital of 1.2 billion in exchange for 26.5% of the company's shares. They also purchased from us all the shares we held in CIBC at market for $517 million. So the government wasn't just going to give them the money like that as a bailout. They actually gave them the money and bought shares, which they could now sell to somebody else and recover back the money that they had given to these institutions. Their shareholding was increased to 76% in November 2000 in exchange for an additional 2.2 billion of capital. This had become necessary in order to restore LOJ's solvency. Even as big banks, insurance companies, small and medium-sized businesses, individuals and conglomerates floundered, the government never seemed to make the connection between monetary and fiscal policies being pursued and results on the ground. You just knew that for every high-profile case like LOJ, thousands of smaller fish were getting fried. Approximately 24,000 individuals, found themselves overwhelmed by an avalanche of debt resulting from excessive interest rates kept in place far too long. The crisis was being driven by powerful fundamental forces that the authorities controlled. Business will thrive in that kind of environment when cows fly like birds. Prior to deregulation of the foreign exchange market, the Jamaican dollar was substantially overvalued, causing Jamaica's production to be uncompetitive in foreign markets. The other effect was a huge boost in the importation of consumer goods, leading to serious balance of payments issues. Our exports faced strong headwinds and imports had a strong breeze at their back. And now we come to this most interesting part, the role of deregulation of the foreign exchange and its implementation. I want you to listen to this very carefully. I was one of those who encouraged government to deregulate the economy and do it as quickly as possible. In hindsight, deregulation at the speed recommended may have been a mistake. You hear that? So when PJ took the decision to deregulate the economy, I believe it was PJ who was the Prime Minister at the time, he decided to take a chance by listening to these business people because they put out that they know this thing and them in a business and you're a politician, so you need to listen to us. They said to him, listen, you need to deregulate the economy and everything will be good and grand and dandy, right? And not do it in piecemeal, not do it piece or phased in. Do it quick and fast. Now he's saying, when he realized the devastation that caused, in hindsight, why did they not have the hindsight at the time? Deregulation at the speed recommended may have been a mistake. A series of small steps over, say, 36 months would have allowed for a more orderly transition, less devaluation and inflation, with a gradual build-up in net international reserves and far less trauma associated with debt. In other words, the government made a dreadful mistake. They are policy makers. They decided to trust the business people of the private sector organization of Jamaica, thinking that they know something about these things, and deregulate, but not do it in a piecemeal way, which is how government usually operate, but do it quick and fast. And that was the cause of everything, including the crash of the economy, because they were trying to fix it. And even as they tried to fix it, these people were still borrowing. And then, of course, they were printing money at the same time, I suppose, to pay government workers. Heaven knows what they were doing with the money that they were printing. Maybe they were printing the money in order to give to the banks to pay their customers. We just don't know the part there yet. Let me continue. Deregulation saw the exchange rate move from $13.42 to $28.10 between September 16, 1991 and April 8, 1992, a 108% devaluation in just 7 months. That caused the first wave of insolvencies in the retail trade. It had consumers reeling with exploding inflation. The bullet had already left the gun and could not be recalled. There was no NIR to stop currency speculation, meaning that when they start to speculate, they would just put some money out in the economy. And people would say, oh, well, we're not going to buy anymore because we have enough. As long as they think there's a shortage, people are going to hoard. The imported raw material content of Jamaica's manufactured goods doubled, of course, because the foreign exchange doubled, along with wages. So much of the benefits they ought to have enjoyed vanished overnight. So deregulation was supposed to have brought competition into the system. But because it was done quick and fast, there was no phasing in. It caused a big problem. And for even those persons who are manufacturing goods, them cost to import these goods double. And remember, we had goods coming from Trinidad and elsewhere to compete with them. Lord have mercy. These forces started the island floundering in a sea of confusion, resulting from the shock of sudden change. Those affected most were government, farmers, consumers, manufacturers, conglomerates, retailers in debt to overseas suppliers, individuals planning retirement strategies, insurance companies, banks, poor and unemployed persons, and pensioners. Those were the persons and businesses who were affected by the manner in which the deregulation took place. And he's basically saying it was our fault. We in the private sector organization of Jamaica, it was our fault for not having the foresight to see what would have happened if we had deregulated rapidly as we recommend that the government should do. And there is where we're going to leave this segment of the FINSAC saga, and I will return hopefully tomorrow with some more. Let me know what you think in the comment section, and let me know if you understand the happenings at the time and what you think about what R. Danny Williams said was their role in the private sector organization of Jamaica in all of this in terms of the advice that they gave the government, as well as what the government did in order to attempt to correct the problem that was caused having taken what essentially was bad advice from persons of the private sector organization of Jamaica who evidently didn't think the thing through properly. Let me know what you think about it. All right, so thank you so much for listening. Thank you for sharing, liking, subscribing, as well as leaving your comments. So until next time, take good care of yourselves and walk good.